In the metals quadrant, copper acting like the risk asset that it's become, up 2% today, its biggest one session move to the upside since about July 11th, moving up into decent resistance. It's hardly a turnaround for copper. It's still in a bear market, but this is a pretty big up move going into some pretty staunch resistance. And if the optimism about the economic situation globally were to continue, we'd be well on our way to our second straight positive week for the industrial metal. It is currently up for the week, but it's only Tuesday, still plenty of time for that to turn around. Trade tensions thawing is the main reason for today's rally. China committed earlier this morning to talks by phone going into the month of September, so 2 weeks from now. So that was a positive because there was some worry given the trouble that the Chinese government's having in Hong Kong and some of the kind of heightened tensions verbally between the US and China, that they might actually bow out of the talks, with the president actually threatening 10% of new tariffs on China effective September 1. But they did commit to those talks, and then subsequent to that, President Trump actually said he would delay many of those 10% tariffs. So again, it was kind of a little bit of thawing on both sides, a little bit of give on both sides. Both sides blinked, taking copper up in the move that we've had today. And then lastly, inverse relationship between the dollar and copper, as always, need to look at that. And the dollar is reacting to global CPI data, going up a little bit simply because the weakness in the German CPI was much, much weaker than the basically as expected CPI that we had here in the US. So we weren't getting that inverse relationship, but it's probably part of the reason that copper pulled back a little bit. The likelihood of a Fed rate cut at the next meeting, especially of 50 basis points, dropped substantially. Some of the yields went up a little bit. Still, everyone's expecting at least 25 basis points. So it's just weaker from a perspective of being dovish than the dollar is. But given the trade talks, copper's much more affected by the potential increase of demand globally than it was by the move in the dollar.